stocks today. First one I'm talking about is IndusInd Bank because so much news flow has continued. This is a thumbs down. So now a couple of things have happened, and let me start with the story that the street is going to watch today. On Friday, you had a Reuters report which cited 4 sources and said that the Reserve Bank of India has asked for the top 2, the VP as well as the CEO, to step down. Now, IndusInd Bank has come and refuted those reports. They've said there's no such thing. What NDTV Profit has learned is that the board will need to come up with replacements for the Chief Executive Officer, Sumant Katpalia, by October. So the lender spokesperson, however, has denied the media reports that the RBI has asked them to step down and end the tenure of the bank's CEO and deputy CEO. Deputy CEO earlier, saying that's factually incorrect. Now, among all of this, expect another thumbs down on IndusInd Bank because you will be seeing a management move quickly, and the next relief possibly will come if there is someone on the helm of IndusInd Bank that is a name that the street likes. So, which is why watch out for that one. The second one is also a thumbs down. Talking about DAM Capital Advisors, the company has received an administrative warning and deficiency letter from SEBI. SEBI has advised it to be vigilant for certain operational related matters of institutional broking operations. So this is a stock which has been buzzing. I don't know if you can quickly pull up how it's done since IPO, but DAM has been in focus. The whole space has been in focus as well. So, which is why watch out for DAM Capital Advisors. Apart from this, anything to do with capital markets has been pretty decent, but since listing, DAM is about 18% down. Alembic, though, is a thumbs up. I do have a thumbs up on my list, and I'm sure these guys have many more thumbs ups to go. But Alembic is the one on my list. The US FDA has inspected a facility of theirs at Karakhadi. The inspection has been completed without any Form 483 observations. So that's important. Not a clean chit, but it's a relief definitely for them. It was conducted from 17th March to 21st March. So at a time when pharma, auto, and some metal counters will be in focus because of tariffs looming, at least some good news for Alembic.
Yeah, and what a move on Friday, 14%.
Yeah.
and it was, the interesting thing is, it was one of a basket of stocks that reacted like that, right? It was not just this one entity. But let's talk about, so in the absence of a lot of corporate updates, I have picked a few brokerage notes that have come through. One on ICICI Bank, and by the way, this is a stock that has done incredibly well last week. It has gained over 7%, and on Friday as well, it was one of the top gainers on the benchmark Nifty 50. Citi is maintaining a buy with a target price of 1600. The target price implies an upside of 19% from this point. What are they saying? They're seeing a positive net interest margin bias in the fourth quarter, and the implications of an increase in the net interest margin on the downside will be to the extent of 20 to 25 basis points from a 50 basis point hike in FY26. That's the next financial year. Unsecured stress is stabilizing, and the chunky corporate recovery is set to aid credit cost. They're saying that they see a gradual credit cost normalization in the next financial year. The loan growth is expected to be sustained. And this is an important point. Unsecured lending is set to gather pace. This is important from the perspective of a bank, a private sector bank, very large one, that has over half of its book that is in the retail space. The second one is Macquarie on NTPC. It has maintained and outperformed with a target price of 475. That implies a significant upside of as much as 35%. What are they saying? They say that it remains a compelling play on India's power demand potential, and the pickup in power demand continues to bode well for sentiment. It has upgraded NTPC's thermal pipeline, and it says that the upgrade to NTPC's thermal pipeline cannot be fully ruled out. And they're also saying that the clarity on the next long-term driver, which is nuclear, should emerge over the course of the next 6 months. The last stock is Ajanta Pharma, and this is an initiation of coverage by Axis Cap on the company. It's initiated with an ad and a target price of 3,050. It says that the strong India business will further drive momentum with the addition of 2 more therapies. Asia and Africa branded business is also lending consistency to this company. The US market is steady but unspectacular. It is a debt-free balance sheet, which is also attractive, and the strong free cash flow generation as well as ROCE is set to continue. The revenue, EBITDA and PAT growth is seen as at 11%, 14% and 16% over the course of the next 3 financial years, culminating in FY28.
I mean, these are interesting names to watch out for. Even the real estate space, which has actually been a downer this time around, right? 2025, we've started on a weak note. Now, there is some bit of positive momentum that's picking up there, because if you look at a Godrej Properties, you pull up that one on the screens, and now they've actually acquired a 10-acre land in Bangalore, and they're saying they're eyeing a revenue potential of almost 2,500 odd crores. The stock ended with gains of nearly 1.5% to 2% at the day's highs on Friday. Now, the proposed development will have a sizable area of almost around 1.5 million square feet and will offer homes in various configurations catering to different segments of home buyers. So that's going to be one of the positives that you should be watching out for. And clearly, Godrej Properties, as we know, overall is a Bombay-based company, and they've started making their footprints in the Bangalore market. I think the last project that they delivered in Bangalore was back then in 2021. So this is coming after some bit of a time period. So this is going to be a market that Godrej Properties will watch out for. So that's a thumbs up on that one. The second one on my list, which is again a thumbs up, is NCC. Now, clearly NCC, they've won an order worth 1,480 crores, and this is from Bihar Medical Services. This is again for a redevelopment project, which is a redevelopment of a college. Construction is expected to be done in the next 42 months. And if you talk about their order book, as on the 31st of December, it stood at around 55,500 odd crores. Why I like an NCC right now is because even last week, they got another 2,130 crore construction order in Amravati capital city project. And this was to build roads, drains, water supply, sewage, utility ducts for powers and ICT, as well as other facilities in Amravati. So just in a span of a week, they've bagged orders worth around 3.5 to 4,000 odd crores. So there could be positive momentum on a NCC. And the last one is a REC. Now, CLSA has come out with a report on REC, and they've maintained a high conviction outperform. They have a target price of 525. The stock's trading now at 528, so 100 rupees upside that could be seen on this counter. The tenure of the current CMD of REC has ended, and the additional charge has been given to CMD of PFC here. What they are saying is that the historical records show that the most top hires at REC have been external appointments who do 2 to 5 year tenures, and the outlook on the stock and expectations of financial performance remains intact. Any risk from a change in management should be more operational or short term. So they do not see any risks coming in here. In addition to that, you have a REC wherein their board will be mulling a fundraising plan on the 26th of March. So the stock will be in focus, and the stock will be trading ex-dividend as well on the same day. So lots happening in and around the company. And overall, if you see in terms of the third quarter, I mean, a 23% up move is what we saw in terms of their profitability. So the performance has been stable. A lot of brokerages have been turning positive in terms of PFC as well as REC. And any pain on the back of the management rejig could be short-term. 100 rupees upside is what CLSA is pointing out to.
All right. And there's more stocks, of course.
No, but I just wanted to add two bits on Godrej Properties Bangalore foray. Is that with the amount of job cuts in the IT sector and the very, very rapid adoption of AI, which is ensuring that there are more people on the bench or not all of them getting brought on, real estate prices in Bangalore and rental, especially in Bangalore, are coming down quite rapidly. So as exciting as it is as a market, there are already a lot of places there. Godrej now getting in there. That would be the only sort of fly in the ointment I would point out.
Oversaturation.
Yeah, and that whole market, the demand could collapse only because that whole market is pushed by IT jobs, and those seem to be in a bit of a funk right now.
I think the question over here from what Tamara is pointing out too is the timing of their re-entering Bangalore, because 2021 was their last project, which they delivered successfully. So the timing versus at the price that they've got the land and the price that they will have to sell. These three parameters are going to be very crucial for them.
Yeah, and obviously what level of the market that they're looking at, because luxury, ultra luxury in any case does incredibly
So Alex,
well.
what's beautiful over here is that they're looking at across segments. So they're not going to concentrate on only luxury or ultra luxury. They're going to look at probably affordable housing in one part of it. There could be
It's a very large plot of land.
It's a large plot, right? So they are planning to cater to 2 to 3 segments. So probably that could come in as a savior. That could be the strategy.